Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's consider the situation on the cryptocurrencies once again. So actually market mostly stands on the same area, as only the activity stands on the lower time frames, on the daily, on intraday charts. So it seems that market is getting tired from constant pressure of the anticipation of the ETF improvement. So if just a week or 2 ago it was really the news that could trigger a significant upward action, currently it seems that market mostly goes in habit with this. And although these ETFs are not approved yet and maybe will be approved only next year, but it's considered as a fact. So an effect of any news release on this subject has the less effect on the market right now. So market's getting tired from this, and it seems some exhausting of the upward momentum based on ETF improvement appears in the market. But at the same time, if we take a look at lower time frame, higher time frames, here we have really nice momentum. As we said, that it is too early to withdraw this resistance level, despite that market has moved above 36, which is confidence. We have another barrier, which is the 38 yearly pivot resistance one. And as I said, and we already talked about this, that this is really vital area for a long-term market performance. Why? Because from the pivot point approach, market on the bearish trend shows the pullback retracement to the pivot resistance one. And that's why if market fails to break it up by the, again, pivot framework, it suggests that previous bearish momentum, previous bearish tendency is still intact. And this is just a retracement. If market breaks pivot resistance one, it tells that this trend is on the hazard of the destruction, and that might be the starting of the new tendency. That's why this 38 area is very important, and particularly important in this year. It's just 2 months left until the end of the year. The positive scenario suggests that market could climb to the 42 area, because this is a BCD target, and in the case of upward breakouts, we probably should get it around this level. So that's what we have on the monthly chart. Trend stands bullish. On the weekly chart, once again, we have bullish context. So market is not at ever bought. So if we take a look at the indicator, you could see it. Also, CD leg shows nice upward momentum. It's definitely acceleration compared to the AB, which is also positive sign. Market stands above the nearest target, and next stands in 41, which is AB equals CD target. But once again, many things depend on the 38 resistance. What will happen here? If we suggest that we don't have and wouldn't have the pivot resistance, in the current circumstances, I would say that the reaching of this level is just a question of time, because market already has passed the 618 COP without any respect, and stands on halfway to the OP. It means that in most cases, market touched the OP area, especially with this acceleration. But this if we wouldn't have the pivot resistance one. So on lower time frames, we also have some bullish signs. So first of all, on the daily chart, we have the double repo failure, just because market has shown close below 3x3, close above, close below, right there, probably it was close below on this drop. And now take a look at close above, but it also closed above the 618 resistance level, right there on from the whole downward action of the double repo. This is the condition of the failure by the Jordan-Napoleon rules of the trading double repo pattern, and which means that double repo failures, you know, it is not just the canceling of the direct pattern, but it's also directional pattern, which is bullish, and it suggests probable upward continuation. Besides, if we take a look at the MACD, you could see that maybe it is not quite clear yet, but that might be growing the signs of the bullish dynamic pressure. We have high lows, market stands flat despite the trend stands bearish, and it ignores the appearing of kind of the double repo pattern. which is also just bullish background. So this combination suggests that the chances of an upward continuation seems better than the downside drop. So finally, on the 4-hour time frame chart, if our conclusion is correct, let's take a look. Market stands in a wide upward channel, and potentially, taking it all together, the butterfly pattern might be formed. What is interesting is that if you calculate the extension, you will see that 127 extension stands around 38.80, which is perfectly agrees with the line right there. So completion of the butterfly, at least the first target, might be around 38.80, 39, somewhere about around this area. But for this purpose, market has to break yearly pivot resistance 1, and actually above it, somewhere to the 39, it's already might be very important. If of course market will not return back down sharp and fast, so it will not be just some kind of the wash and rinse of the previous top and collapse. I mean constant upward action and stable standing above the broken 38 area. So that will be bullish sign. So on hourly chart, as I said, we have nothing really interesting. The tactical local target stands around 37.75, which is the XOP of this ABCD pattern. So market probably will try to reach it. What the trading decision you could make? First of all, if you would like to possess an upward breakout, you probably better to use stop buy order above the top. So it means that it will be safer to buy somewhere in the moment of the breakout or near the breakout. So if you would like to possess yourself with this upward action, because on hourly chart you can see that this performance is very slow and gradual, and here might be some surprises for the pullbacks or something. That's why if market indeed bullish and it's ready to go higher, probably the 38 area will be broken. And from that standpoint, one of the solutions might be is using stop entry order instead of the just buying on the current situation. That's one of the ideas that you could try to use. Also, you could try to use the butterfly itself. So within validation point somewhere below A, if market will show some pullback here, maybe minor pullback, you could also consider position taken if you have the bullish view on the market and you suggest that it will be upward action. So for the bears, unfortunately, currently I do not see something really interesting because context everywhere stands positive. We have the bullish trends on the 4-time frame chart here. We have directional bullish pattern, as I said. So it also doesn't suggest taking any short positions. And the weekly and monthly trend also stands bullish. So currently we have to wait for a more bearish, some more clearer bearish signs if you would like to sell. So currently we think that we just do not have the context for taking the short position. So it is a question whether you would like to buy right now or not. So maybe you prefer to wait some more clarity and some strong bullish signs. But for selling, it's definitely, the situation is not ready by far.